Hi class, a pleasant day to all of you. This is your Prof. Dan, and in this video we are going to discuss budgetary planning. And our topic is define budgeting, describe the purpose and processes of budgeting, and explain master budget. And the specific lessons are number one, what is budgeting and what are the benefits of budgeting? Number two, what are the different methods of budgeting process? And number three, we will discuss what is master budget. So let us now start the discussion. What is budgeting? Budgeting is the process of identifying, gathering, summarizing, and communicating financial and non-financial information about an organization's future activities. So take note, in this definition, it is a process, okay, of gathering, summarizing, and communicating financial and non-financial about future activities. Okay? The output of this process is called budget. So, what is the purpose of budgeting? First, it is the formal method of detailed financial planning. When we speak of financial planning, we mean documentation of the company's goals. Okay? So, when we will look at what is the primary company's goal. The goal of the business is profit. And to achieve profit, we have to consider the sales of the company, the cost of the product, and the operating expenses. Okay, so with that, sales less product cost, less operating expenses will give you the profit. So in financial planning, we have to plan on all of these uh, elements of the profit. Okay. So financial planning also provides the roadmap that guides owners and management. Okay. It also provides the chart of the course of business operations. When we speak of the course of business operations, we are referring to how are we going to achieve the profit of the business. What are the strategies that we have to employ in doing the operations to achieve profit? And when is the timeline of achieving a certain target? And then who are responsible? So the financial planning will provide um, answers to these questions. The second purpose of budgeting is monitor and control the plan. So when we do budget, we are making a gauge to measure actual results. Okay? If we will prepare sales budget, then we can compare the actual sales from our sales budget. If we have done production budget, then we can compare the actual production with our budget. And if we have done factory overhead budget, then the actual factory overhead, we can compare it with the budget. And similarly, if we have done selling and administrative budget expenses, then whatever the actual of selling and admin, okay, we can do a comparison. Okay? Next, let us discuss the benefits of budgeting. More or less, the purpose of budgeting and benefits of budgeting are similar. However, there are certain things that we have not discussed under the purpose of budgeting. Okay, so the benefits of budgeting are number one, helps to plan ahead and formalize goals. Number two, maximizes the use of resources by coordinating the allocation of resources in accordance with the desired goals of the company. Okay, so class, take note. Okay, due to budget, the company will be able to coordinate how the resources will be allocated. Okay? And number three, it provides definite objectives for evaluating performance at each level of responsibility. Okay. So, class, this is similar to the uh, evaluation or measuring actual performance with the set budget. Like we have discussed in the previous slide, sales budget or the actual sales can be compared with sales budget. Okay. However, there are other things, okay, that can be prepared by each department to measure their performance. Number four, it creates early warning system for potential problems and make actions before things get out of hand. So in certain situations wherein you have the company had prepared a budget for gas and oil, gasoline and oil under the administrative expenses, and then if the budgeted amount is five five hundred, okay, 500 pesos, and then your gas and oil expense went up to 1,500. Okay, so you can spot that there can be a problem. Okay, the number five facilitates coordination of activities within the business. So if we have a budget, we can have coordination among the departments. Number six results in greater management awareness of the entity's overall operations. Okay, if the company has a budget and a particular department will be aware of how things are going, okay, so there will be awareness on each department. And lastly, it motivates personnel throughout the organization to meet planned objectives. Okay? Now, class, let us discuss process in developing budget. We have here number one, participative budgeting or bottom-up budgeting. This participative budgeting, it is the process in which personnel at all levels of an organization actively engage in making decisions about the budget. Participative budgeting gives a sense of ownership to participants in the budget development. And class, participative budgeting helps ensure that departments will attain targets and stay within the budget. And class, participative budgeting is viewed as the key to a successful budgetary process. So let us illustrate how are we going to implement participative budgeting. If this is our organizational structure, each department will be tasked to develop their respective budgets. Okay? So, with that, when each department is tasked to develop the budget, of course, each offices under that particular department will be involved and engaged in the development. Okay, like in this administration department, finance office will develop their own budget, accounting, and human resources. Under production, the production control will develop the budget, the budget of the particular office. The purchases will develop the budget of the particular office. Planning, warehouse, and manufacturing will develop their respective budgets. Okay. Similarly, marketing and sales department, okay, will develop the product marketing, the sales budget, and customer support. Okay, it depends on the activity. Like in administration, basically they will develop the administration expense budget. Okay, the production department will develop the production budget, the cost budget of production, the budget for the cost, okay, product cost, and then the respective administration of the production department, the administration expense budget. Okay, and for marketing and sales, they will also develop the expense budget as well as the projected sales budget. Okay, so upon submission, upon development by each department, then this will be submitted to, or there will be a discussion. Okay, and there will be an involvement of the president, chief financial officer, vice presidents, and the heads of all of these departments. There will be a discussions on this. There will be coordination, agreements, disagreements. Okay, that if everybody agreed on the budget, it will be endorsed to the board. Okay, and then with this, if the board approves, then that will serve as the budget of the company. Okay? So here you will note that the illustration indicates that there will be involvement, okay, of on the development of the budgets of each office. Okay? And the second process is the authoritative budgeting or top-down budgeting. So in this, CEO and senior executives dictate targets. So here, it does not allow middle managers and supervisors to be engaged in the budget development. So here, without the manager and supervisor's input, then there is a tendency that targets may be unrealistic and impossible to attain, thus undermine motivation of managers and supervisors. The managers and supervisors will just say that that's hardly impossible. Okay, so we cannot do that. So their tendency is to withdraw in the participation in achieving the desired target. CEO and senior executives allow CFO to develop budget without consulting other managers. So they will probably ask the chief financial officer, okay, go ahead and develop the budget. And then the CFO will probably develop the budget based on historical data without consultation with other managers. So managers may feel budgeting is not a top priority because it was not coordinated with them. So here, if we have the structure, we will illustrate how authoritative budgeting works. Okay, so if here the president and CFO as the top management, they will develop the budget, and then without coordinating it with the departments, they will just develop it and just and endorse it to the board. Okay, they will dictate. The president and CFO will dictate the numbers. Okay, on the budget, and then if it is approved by the board, then they will ask the department just to follow it. Okay, implement it. Okay. Okay, class. Now let us discuss master budget. The master budget is a set of financial budgets that detail an organization's financial plans for a specific accounting period, generally a year. The master budget contains the operating budget, which is it shows the income generating activities of the firm, including revenues and expenses. So the result of the operating budget is the budgeted income statement. So actually, under operating budget, the company is preparing budgeted income statement. Okay. The other part of master budget is financial budget. And financial budget focus on capital investments, projects, and other non-operating activities that will require substantial amount of investments. Okay, here under financial budget, it is non-operating activities. Okay, under operating budget, it is income generating activities. Examples of financial budget are purchase of new equipment, expanding the market by opening a new branch, launching a new product or project, and construction of a building. Okay? Okay, class. Again, let us take a look of the composition of master budget as we have discussed from the previous slide. Master budget consists of operating budget and financial budget. And under financial budget, there we will have cash budget, capital expenditure budget, and budgeted balance sheet. Class, in this course, we are not going to discuss financial budget, okay? What we will be discussing is operating budget. And then we are going to prepare the components of the budgeted income statement. And the components of the budgeted income statement are sales budget, and under sales budget, you need to prepare a production budget. Okay? We will also prepare the cost of goods sold budget. And under cost of goods sold budget, we will prepare the direct materials budget. We will prepare and illustrate the direct labor budget. And we will prepare and illustrate factory overhead budget. And also part of the budgeted income statement is the selling and administrative expenses budget. So class, in this uh, topic, okay, in this module, budgetary planning, we will be preparing sales budget, production budget, direct materials budget, direct labor budget, factory overhead budget, and selling and administrative expenses budget. Okay? Okay, class. So if you have question, please let me know. So bye for now and have a great day.